Amortization expense is for the pattern, and then depreciation expense is for the buildings and equipment. Okay, so credit income from board, credit NCI and NI. This is 70% of 9,000 and then 30% of 9,000. And then differential reclassification entry. So the buildings and equipment will be the same. Sorry, for the buildings it will be 20,000. Okay, for the pattern, because it is an intangible asset, so there is no accumulated amortization. Instead, we directly minus it into the pattern itself. Okay, so it will be 21,000. Okay, because it has been 2 years. Okay, so for the first year it is 35,000, right? And then we minus amortization expense 7,000, it will be 28,000. And then on the second year, starting at this question, okay, it is 28,000 minus 7,000 again, so it will become 21,000. The same thing with the accumulated depreciation, because it is on the second year already. 1 year is 2,000, so taken from last year 2,000 and then plus this year 2,000, it will become 4,000. Okay, and then the investment in bulk is just simply the sum of the debit minus the credit times 70%. Same thing with NCI and A. And then we have done with the differential. We go to the inventory. Okay, so we need first to reverse the gross profit. Remember to distribute to parent and the NCI. Okay, so we reverse 9,000. 70% goes to parent, 30% goes to NCI. And then we have the upstream gross profit that must be deferred, 8,000. Okay, so debit sales credit, COGS credit inventory. And then we have the downstream also. So again the same, debit sales credit, COGS credit inventory. And then remember, this inventory, it has been more than 2 periods, so we need to do this entry, the deferral of this year's unrealized profit on inventory transfers. So instead of credit COGS, we credit inventory. Okay, because it is already 2 periods, okay, and not resold again, so we need to make this entry. And then we have the accumulated depreciation. So actually minus 2 years depreciation expense, because we are using the first time of acquisition accumulated depreciation. There's for A, and then we go to B. Simply move the data from the trial balance to the income statement part. So sales are at other income. Okay, so this question has other income minus COGS, depreciation expense, interest. Okay, and then we have amortization expense, remember. Okay, and then it comes from bulk. Then we have NCI in NI of bulk. Okay, so just sum it down. Okay, and then you move the entries from the elimination entry that we do. Okay, income from bulk, NCI and NI. Okay, and then we have amortization expense, depreciation expense, income from bulk, and NCI and NI again. Okay, this year. Okay, and then we have the reversal. Okay, then we have the upstream deferred gross profit, 90,000. Actually, if you want to separate the row, it's okay. If you want to combine it with the next one, it's also okay. Okay, and then same thing, and then no more. Okay, so sum it down. Then for the consolidated, you need to be very careful again. So for the sales, remember to minus the debit side. For the COGS, you need to plus the credit side, because we need to decrease the amount. Okay, for the depreciation expense, because it is an expense, and minus, if you want to add the amount, you need to minus also. Okay, the amortization need to put minus because it is an expense. Income must be 0, And then for NCI and NI of block, it's minus debit plus credit, remember. Okay, so if the consolidated net income is on the consolidated column, then it is already equals to the parent, then you can go to statement of retained earnings. So you take the number from the balance sheet, from the trial balance, then move it. Net income is from the previous section. Okay, then dividends, sum it. Okay, you move from the elimination entry, and then you do the consolidated column. So if it's already the same, the balance between the consolidated column with the parent, we can go to balance sheet. So the asset is cash, inventory, land, buildings, investment, accumulated depreciation. Remember we have pattern also. Okay, and then for the liabilities, we have accounts payable, bonds premium. Then we have common stock, retained earnings, and NCI in NA. Okay, so just move off the number. Okay, make sure it's balanced first, and then you can go to the elimination entry. For retained earnings, remember to always take it from the previous section. Okay, we continue from our elimination entry. The first one, of course, is common stock, then investment and NCI in NA. Okay, common stock, then investment, NCI in NA. Okay, and then we go to differential classification entry. Okay, so put all of it: debit building, debit pattern, credit investment, credit accumulated depreciation, credit NCI in NA. Okay, and then we have this reversal. Okay, we debit investment, debit NCI in NA, and then we have from the upstream deferred gross profit and the downstream deferred gross profit also for credit inventory. Okay, then for this one also we need to debit investment, debit NCI in credit inventory. Okay, this one, then the last optional accumulated depreciation. Okay, so just sum it. For inventory, you sum it and then you minus off the credit. Okay, land, then buildings and equipment, you sum debit, you sum it and then plus debit minus credit. Yeah, and then for accumulated depreciation, you plus this, and then you minus this, and then you plus the debit. The debit. Okay, and then pattern, just move it on the positive number. Investment must be 0. So this one, you plus the debit, you minus off the credit. Okay, you will get 0. Then accounts payable, bonds payable, bonds premium will be the same. Common stock also, like the way you usually. Retained earnings also. And then NCI in NA, you sum the credit, you minus the debit, so you get this number. Okay, so if it's balanced already, then it's done.